Welcome back to the channel. We're going to be going over the SP500, the Nasdaq chart as well, and what's really happening with the rate hikes, the stock market crash, and everything you need to going into this week to prepare you for trading. Now, we're going to go over an overview of what's going to be happening with the Fed meeting this Wednesday, and I'm also going to be going over how we knew the S&P was going to touch 410, 411 range, which we covered in the previous video, the one right before this. I gave it to you before the close on Friday as well, but we need to talk about what's happening here, because this is where all the questions kind of lie. And this is going to tell us everything that we know is going to happen, which we know they're going to start raising those rates back to 3.5, 3 minimum. They're currently at 0.5 with 6 hikes left, including the one coming up this week. That's going to be 6 total. An average of 5 is going to get to 3.5. So we're expecting the first half-point hike since 2000, which we can get into that here in a second here in the charts based on what's happened since then. Fed expected to unveil plans to start trimming the balance sheet. I think this is understated with what's going to be happening here. I'm going to give you a link down below for this as well so you can read through this because we're going to cover it pretty quickly to get to the charts. But they are going to start unveiling and trimming that balance sheet. They've said that's priority number 1 right now. And then borrowing costs are climbing faster than maybe ever. They're climbing very rapidly. I don't really care for anything else. This is kind of, hearsay, more opinionated there. But these are all factual based information, the main 3 bullet points here. So when we get in here, we're going to look at the S&P, the Nasdaq, and then I'm going to go into why and how I expect the Fed to start moving going through this. As you do 2 things, like and subscribe. It helps out the channel tremendously. Daily content as always. So we get in here and you're seeing the S&P kind of hit this double bottom right now. And this bottom is from February. This February low, just so you know, it came from the Ukraine-Russia tensions. That's what shot you all the way down here. But now you're hitting this point of inflection. It's finally coming to realization. 50-point hikes are coming. Are we going to a recession? Interest rates, it's huge. Inflation, 8.5%. What happens from this level? So I'm going to tell you right now, based on just charting, price action, everything like that. From this move, what you saw from basically the lows here to here, I want to point out what happened based on volume. And if we look at volume, it's going to be very clear. From that level right here all the way to right there, you can see here to here, what is volume doing? It is declining out of that range, and it continues to decline really ultimately until this level right here. And we've covered this level is specifically when Powell came on and said they are going to start getting those 50 BPS hikes. Those are no longer room to wait. We have to start doing them. That happened, and volume kicked into new gears, breaking out a trend and pushing you down rapidly. That was the big, telltale sign there. Now, what is the projections? What am I looking for in the chart? Now, I said if you break below these lows, which you haven't necessarily yet, you haven't broken through. If you break through those, I think you're going to test around 400, 395. So what you're looking for here is if you break down below, a retest, and then you would try to short it, play it to the downside locally to that range. Now, I'm going to continue watching this and how we progress into this recession, how we progress into this overall flip on the market from perma-bull thesis. But as of right now, you're going to start seeing that next line of support around 395 after this 410 region, in my opinion. 395 all the way down to 391, give or take down here. That's your next key level. But first, you have to break below this, and so you don't want to play anything like that until you break below. So as long as you're in this range, you have to remain a bull. So as long as you stay above 410, you have to anticipate upside. Why? Because you're still holding support. But based on volume, based on some of the big indicators, you can also see that it looks like you're going to start getting that breakdown. And then as we come over and look at the Nasdaq, things look a little bit less appetizing. So you come in here and you can see these are your lows back from February. These are your lows back from, March, things like that. This is your actual low back in March. You got lower than SPY in March, and you've already broken below, and you're kind of double bottoming from those lows you've already made. And these are your new lows that you made on April 26th, and I think you're setting up to break below these. I personally think the Nasdaq looks incredibly more bearish. It already looks like it wants to break down. You've already seen massive spikes in volume compared to the previous levels on that run back up. These were nothing. These are huge levels of buying and selling, which indicates that people are making decisions right now, specifically with what happened with earnings. So more downside looks like it's coming there on the Nasdaq as well. Going into here, I have to say 1200, 12.2 is going to be my next support down here. If I had to just give you a highlight range just so you could see, I'll have better estimations on that support as we play out a little bit more. And I also need to see if we're actually going to break below that level right there, because people keep asking me, where's our next line? Where's this? Where's that? How are we predicting what we're looking at? And in my opinion, it has to be down here about 12.2 all the way to 12 flat. That's going to be your support. Similar to how 13.3 was a major level for us all the way down to 13. Very similar type of price action going on here. So you want to see if you're going to hold and the volume's going to continue to increase, because if it does, you're probably going to keep pushing down. So as long as you stay below 13, in my opinion, you're very, very weak on the Nasdaq. Now, just so you know, you can go to investing.com to get all this information. Look at the earnings calendar. You just click on news and then go to economic calendar, and this will pop up for you. And then you just go to this week, and it'll actually give you a whole week rundown, just so you know, just so you can follow this information as well. I just went to this week. You can even go to the calendar and specify whatever you want to do. And then you're going to go down to Wednesday, because that's the key day here. That's the big day. That's when you're going to get the Fed decision and FOMC talking, everything like that. It's going to be very, 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 very important, and that's what you're going to be getting down here. So I want everyone just to be aware right here. This is what you're looking for. 12 or 2 o'clock, I believe Eastern is the time that will be dropping, and that's going to be the overall mover on the market. So going into this, beginning of the week, I anticipate volatility to be spiking, buyers to be stepping in all across the board on both sides of it, VIX, UVXY. I expect massive volatility. So people are saying that you're going to get a bounce after this, and it's totally possible that you do get a bounce, because as you look back at the Nasdaq chart, that's where you ultimately got that bounce back here. Once they made that Fed decision, once they got confirmation on what was happening in steadiness, that was good. You got that bounce, you got the lowest possible rate hike. That was good news. But the difference here is going to be something, something that we're not really talking about. People are commenting down below like, well, if we get that same certainty that we're going to get a 0.5 and that's the overall future of what's happening, then maybe we'll be in a positive manner. And I can't say that's the case, because if you look at what's happening based on the inflation numbers, they're growing where we have not peaked. They're saying it's possible we peaked, but they also haven't really made a major adjustment or step into tapering or getting those hikes back up. So I can only imagine that we have not topped off on inflation, and it's going to continue to spike as of the next few months. So if that continues to happen, you have to continue to remain a bear, because they're going to have to do more and more to take control. And the big thing here is you're not getting any government assistance. You're back in 08, 2000, the bubble crash back there with the dot-com bubble. You had assistance from the government. You don't have that now. So that's all the things you have to be taking into consideration right now. And that's what I'm watching for. So right now I'm going to be trading pretty safely, not too crazy towards the downside. I will be playing the ups and the downs, but I believe you just have to be very much on guard. And if you stay below 13, just for instance, if you stay below that 13 region, you will push down to 12.2, most likely. That will happen in a hurry. On the S&P, if you stay below and you get below 410, in my opinion, you will hit 400, maybe 395 region down here. That's where I'd be targeting. But as of right now, you're staying above those previous lows you made back in February. That is good news. The S&P is trying to hold up. You can even take a look at the Dow. You can tell by looking from the Dow that you're actually breaking down below these levels, and you're making new local lows, and you have room ultimately to come back and test those February lows. So this coincides with the S&P having more downside to 400, because you have still a lot of room that the Dow's been holding up compared to the Nasdaq and the S&P. So there's a lot of concern, and there's a lot of wiggle room for more downside. And again, what we're going to have to watch for, I'm going to keep highlighting this, the yields. This is going to be big. As you look at the 30-year, you're seeing at the end of the week, you saw it spike right back up at the end of the day on Friday. This is going to continue to happen, and we need to watch how this inversion moves going into next week as well with those rate hikes. We saw what happened last rate hike. You went from here all the way up to almost a whole complete inversion. Again, if you're new to the channel, you can see based on the previous crashes, this is what's happened. Every time you invert on these yields, boom, you come crashing down. have it here, come crashing back down there. This was a little bit less of a crash down because you had that COVID stuff happen as well. It was just weirdly timed, but I don't believe you're going to have any type of government assistance like you had in this region. So you need to be watching and waiting exactly for this is going to be happening, and I anticipate these to be spiking in the next few days as well. Like, subscribe, do what you got to do. More content will be coming, more updates are coming specifically on the indexes and how I'm trading them. Have a good one, traders.